Let's get to some of our movers here this morning, starting with American Express reporting third quarter earnings today, beating the street's expectations, also saying that the full year is going to be in line with its prior forecast. Now, compared to last year, revenue was up 13% and earnings per share increasing 34%. Amex saying that resilient spending from their wealthy customers helping the company dodge the hit from inflation and also the impact of rate hikes. When you take a look at some of these other drivers here for the quarter, when it comes to that revenue growth there that I just mentioned, that was helped in part by a massive increase that we saw from the company in terms of credit card fees. They raised that by about 20%. And putting that in perspective, for everyone there at home, fee cards accounted for more than 70% of the new accounts there at American Express in terms of how much people are paying. Their Platinum card, the annual fee there, $695. They've also been adding some more perks to some of their other fees. The Business Gold Card fee there rising to $375 from $295. But when you take a look at the spending trends that we're getting here in this report, it points to what we've been talking about now time and time again, that the consumer is still out there spending. And this is certainly a look more so at the wealthier type of customer here, but it certainly does show that the consumer remains resilient.
Yeah, a few things. Number one, the consumer that you mentioned. This is a company that's been trying to annex and has been successfully doing so, really making sure that it's got a bid within that millennial user base as well and customer. And so that begs this larger question and transitions the thought naturally to, okay, where, for millennials that are still holding on to student debt, where could the rate environment, also the return of student debt, also be impacting what those spending patterns look like, and where you're ultimately seeing higher write-offs or some of these early tenure holders being under pressure here. Now, particularly, one of the other things here, second thing that caught my attention, is they moved higher their total provisions for credit losses here, and that's up by about 58%. I imagine the street might be paying some attention to this here because as that sits at about $1.2 billion for this most recent quarter, 58% move higher in what they're expecting for some of those credit losses here. That is a significant number to keep a close eye on as well here. So ultimately, they mentioned that the card metrics remain strong during the current quarter, but the write-off and delinquency rates for total card member loans and receivables are below pre-pandemic levels here. So we'll see what more the company has to say on that earnings call as well as we monitor that.